Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that is currently trading below intrinsic value per share, and that stock is PulteGroup. They're down around 15% over the last year in the same time period that the S&P 500 is down around 11%. And at the current share price, as a result of past events over the last year and potentially up-and-coming catalysts, this stock might be presenting an interesting buying opportunity. So we're going to figure out why that is in this video by looking into some of the recent news that's come out for the company, as well as their financial statements, and then also using a discounted cash flow model to figure out the intrinsic value per share of the company. And so basically, PulteGroup constructs homes and sells homes in the United States. So they are competing with some of the other companies that I've covered on this channel before, like Lennar, KB Home, and DR Horton. And we can see right here in Business Wire a little article that points to some of the recent news that's come out about PulteGroup. And basically they announced an expansion into the Southeast by making some expansions in operations in South Carolina. We can see right here they talk about how their subsidiary Innovative Construction Group basically expanded their manufacturing operations to South Carolina, and this is going to help them focus on single-family and multifamily homes and construction to increase their production and distribution capabilities to meet the growing demand in the Southeast. So it's definitely good to see that a real estate company like this is focusing on expansion, because obviously over the last year or so, there has been a pretty hot real estate market. The prices have been increasing, and that's one of the main contributors to a lot of these real estate companies trading below intrinsic value per share right now. And so if they want to maintain that growth, it's definitely imperative that they continue to expand so that they can keep up with the growth of their company. And then right here in another article at Business Wire, they cover the fact that PulteGroup recently increased their quarterly cash dividend by 7% to around 16 cents per share. That was approved by the board of directors, and this article came out around December 1st, 2022. And so basically any shareholders of record, that's basically anyone who's holding on to shares of PulteGroup by December 14th, 2022, they're going to be paid the dividend of 16 cents per share on January 3rd, 2023. And so if anyone watching this video wants to capitalize on the dividend that PulteGroup is going to be paying, you want to be holding onto shares of this company's stock on December 14th, 2022 in order to get paid that dividend on January 3rd of the next year. And so right here we have their financial statements. This is their balance sheet comparing September 30th, 2022 to December 31st, 2021. During that time period, their total assets have increased by about $1 billion from $13.3 billion to $14.2 billion. They have around $6 billion worth of liabilities on their balance sheet as of September 30th, 2022, and around $8 billion worth of shareholders' equity. And then right here in their income statement, we can see, comparing their results for the third quarter of 2021 to 2022, their home building sales revenue has increased from around $3.3 billion to $3.8 billion. So that's an increase of around 16% year over year, and that growth was mainly driven by a 15% increase in average sales price to around $545,000 per home, as well as a 1% increase in the quantity of homes sold. So not only did the average price per home that they sold increase by 15%, but they also sold 1% more homes in the third quarter of 2022 compared to 2021. And that's actually something unique that we've seen to PulteGroup, because some of the other real estate companies that I analyzed in the past saw an increase in revenues as a result of an increase in prices, even though they saw a decrease in the quantity of homes sold. But in PulteGroup's case, they actually saw an increase in the average sales price and an increase in the amount of homes sold. So that's definitely a good sign. We can also see right here in their bottom line net income, that's up from around $475 million to around $627 million in the third quarter of 2022. So that's an increase of almost like 30 to 50% here, from 475 to 627 million. So that's definitely very impressive earnings growth for PulteGroup year over year. And then lastly, we can see their earnings per share is up from around $1.82 per share to $2.69 per share. So that's an increase of 48% year over year for their earnings per share. So not bad for PulteGroup here. Now, if I go to page 8, we can see their statement of cash flows for the first 9 months of 2022 compared to 2021. And in 2022, they actually had net cash used in operating activities of around $300 million compared to net cash provided by operating activities of $540 million in 2021. And we can see the main reason why that was because of an increase in purchases for inventory in 2022. They purchased almost $3 billion worth of inventory in 2022 compared to only $1 billion in 2021. So that's probably indicative of the fact that there has been a very large increase in demand for homes recently in the housing market. And so to try to meet that demand, they're purchasing more inventory, which they can then convert and sell to customers later on to increase their profits. And then right here in their cash flows from financing activities, we can see the two main line items to focus on here are share repurchases and dividends paid. And we can see they're returning a ton of value back to their shareholders, around $900 million or almost $1 billion worth of share repurchases were made in the first 9 months of 2022. And they also paid out around $100 million worth of dividends to their shareholders. So that's about $1 billion, a little over $1 billion worth of value returned to shareholders in the first 9 months of 2022, despite the fact that they actually had net cash used in operating activities. So not only are they returning value back to their shareholders, but they're returning value back to their shareholders in a year where they had negative cash outflow from their operating activities. So depending on how you look at that, that could be a good sign or a bad sign. A good sign in that, obviously, if you're a shareholder of PulteGroup, that's a ton of value returned to you. And if they're repurchasing shares and they're increasing their earnings, their market capitalization is going to increase, their earnings per share is going to increase faster than their earnings for their company, and that's going to end up returning a lot of value back to shareholders in the long term just from holding on to shares of their stock. But on top of that, not only are they returning value, but they're returning value in a year where they had negative cash outflow. And so they're really putting an emphasis on prioritizing returning value to shareholders as opposed to just reinvesting that capital back into the company by keeping it on retained earnings and then investing in the company that way. So could be a good sign or a bad sign depending on how you look at it, but definitely interested to see where this company will go from here. And so we can see right here their discounted cash flow model to figure out the intrinsic value per share for the company. Yahoo Finance is estimating that the company is going to grow at around 9% compounded annually for the next 5 years. And so I cut that in half to about 4% for the next 5 years after that. They had around almost $1 billion of free cash flow in 2021 with around $2.5 billion worth of debt on their balance sheet and about 220 million shares outstanding. And so that puts their intrinsic value per share at around $53 per share, which means that currently PulteGroup is trading basically right in between their intrinsic value per share and a 30% margin of safety. They're currently trading at $44 per share. So that does put them at a pretty interesting buying opportunity if they're able to grow at these projected growth rates of around 4 to 9% for the next decade or so. And then on the right-hand side here, I compared them to some of their competitors that I spoke about earlier in the video, Lennar, KB Home, and D.R. Horton. And we can see across the board, PulteGroup has around a middling gross profit margin with second to last place in net profit margin, and they have the second place return on assets after D.R. Horton. So they are pretty competitive from a financial ratio perspective. And then lastly, in terms of an intrinsic value perspective, we can see they are trading below their intrinsic value per share at the moment. So not really sure what to think of PulteGroup here. Their stock could be doing a little bit better over the last year, but based on this decline, it could be a good time to buy into the company to experience the return in the market in the next year or so. So let me know in the comment section down below what you guys think of PulteGroup. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.